So what's the top to down approach? So top to down approach means like what I do and how to frame your trades from higher time frame to a smaller time frame by using liquidity strategy. Okay. So now if you're doing intraday, then only you have to do you need a higher time frame narrative. Okay. And if you're doing scalping, then you only need a narrative of 15-minute time frame maximum, or 5-minute time frame is enough. So if you hold trades for long, or you hold trades for minimum like 4 hours, then this will help you a lot. Or if you do scalping also, then also it will help you. So let's start this video. So if you look at over here, okay, it's gold chart and it's live going on right now. Okay. And there was a trade which I took on this gold, and it was like a $1,000 risk, and I just targeted for 1:2. So now if you look at over here closely, okay, this was some sort of weekly high, right? And it was a daily high also over here. It was an old daily high, and today's Monday, so it went up. And so now we know that what will be resting above of this line, because people will think that this is some sort of breakout, and they can see that gold is overall bullish for months, okay, from last year December. So people will think that it will keep on going up, but there will be some sort of retracement sometime. So I know that there will be retracement to this fair value gap over here, or like over here, or it can go below of this low also. Okay, we never know. Or it can go below of this low and then it can go up. But there will be a retracement, so this week will be bearish. So my bias for this week on gold will be bearish, and I can be wrong. Okay. So whenever I will be wrong, my risk management will save me. But my prediction is that it will be bearish. Okay. So when price went up over here, and I saw that there the liquidity rate is done, so the liquidity is taken over here. So now I will go on smaller time frames. So if I go on smaller time frame, okay, and if you look at the time below, it's like overlapping London session and New York session. It's like 5 o'clock New York time. Okay. And now if I go on 15-minute time frame, I was late into this entry. Okay. Otherwise I would have got a very good entry. I was late. I entered over here, market went up a little bit, then it started to fall, and then it kept on falling. Okay. But the thing is, over here you saw on daily time frame price has taken the liquidity. Now go on smaller time frame to look for a market structure shift. Okay. Now you can look for a market structure shift in a 15-minute time frame, because it's so clear. You can see there is a market structure shift over here. Okay. Like it was creating a higher highs and higher lows. So now you know that price has taken the liquidity, right? Then only that's why we are looking for market structure shift. Okay. Otherwise we would have not taken this market structure shift seriously. We would have thought like this is a liquidity grab from here. Okay. And we would have taken a buy over here. But we know that on a higher time frame, the price has taken the buy side liquidity. So, and there is a market structure shift, so market can fall down from there and do some sort of retracement. Okay. So now you can see that there's a certain market structure shift in a liquidity pool over here. So you will mark the market structure shift over here like this. And now you should look for a fair value gap. And there's a one clear fair value gap over here, and which is very easy to find. Is this one. Okay. And market went a little bit, this price went a little bit up. Okay. And then it started to fall from here. But if you want to get a little bit more precise entry, which I say you should not, because if you go for more precise entry, you will lose some trades or you will miss some trades. So if you go on 5-minute time frame over here, okay, now there is a gap over here and there's a gap over here also. But what's the fair value gap? So to know what's the fair value gap, you should use the optimal trade entry and price, and the fair value gaps which are above of the 0.5 level and which are close to this 705 level will be a fair value gap. So this is a gap over here, and there's another gap which is right over here. Okay. So you can see how price from a pinpoint fills the whole gap over here, fills all the imbalances in this price leg, and then it started to fall. And I was so stupid to enter right over here. Okay. But never mind. I was thinking that price will respect this fair value gap over here. Okay. This is what I thought. And that's why when market went up, I said just took a sell over here. But market went a little bit up, so I holded the trade to see that potentially like market can reverse from this. And now after that, price started to fall, and then it kept on falling, and I just targeted for 1:2. And you can see 1:3 over here. It was not 1:3, it was 1:2. Okay, I just targeted for 1:2. That's my risk management. I just targeted for 1:2. So you can see that how we look for market structure shift. First, you should be on daily time frame on Saturday and Sundays. On Saturday and Sundays, you should look for that what will be the whole week, what the whole week will do. The whole week will go for buy side, or the whole week will go for sell side. Okay. And now after that, you will have a bias, and your bias can be wrong for the whole week also. So don't stick with that wrong bias, otherwise you will take a lots of losses, like you can go into losing streak. Okay. But the thing is, you should predict like, yeah, it's for 50% or 60% my bias can be correct. So you can know that price has taken the buy side liquidity, so there can be some sort of retracement over here. And then we went on 1 inch time frame, and then we saw this also, like this was this old high over here, it went above. And now on 15-minute time frame, we can see a structural low, swing low, and this is a swing low. Okay. Not this or not this. This is a swing low. And why this is a swing low? Because this swing low was responsible to take out this swing high over here, and this swing low first did a retest on this fair value gap, and then it went up. Okay. So that's why this is a swing low. Okay. And I talked about the swing highs and swing lows in my older videos, and if you want, I can make a dedicated video on this one more time. But this is a swing low. That's why I can find out when market went down. This is a market structure shift, fair value gap, and there was an entry right over here on this fair value gap, and the target was 1:2. Okay. So this how easy it is. Okay, it's that easy. You should know about what you call you should know about the bias. What's the bias? Because some people will take a buy, like some people that with my liquidity strategy only, like people will take buy when price will go below of this. Okay, they will take buy over here. They will be in 1:1 profit, but then also their break even will get hit over here. Okay, because overall bias is bullish, so people don't know that price has gone above of that structure, so they will take a buy over here and they will take a loss over here. Okay, and I should show you more examples. Yeah, this was also an example on USD and this one I marked last night, I guess, like in, yeah, like this is also a good example. Okay, so price went above of this high over here and this high. These are not that much relatable, but let's take this high only. Price went above of this high and it went above like this one candle and then it shorts towards the downside and take all the stop losses. So now on daily time frame, if you look at it on the daily time frame, you can easily find out the bias. So the bias was bullish. Okay, and I think so price can go and take this high over here, but like some sort of thing something happened. I think so, like market started to fall after taking this high, or some sort of interest rates thing going on between US dollar and Swiss franc. Because of that, there was this market structure move towards the downside. Okay, and when there's a move towards the downside, there will be lots of break and retest trader. They can see that price gave a break, right, and then it gave a retest, and now it's falling. Okay, so now they will think that, okay, so price is falling, so if they took a sell on this retest over here, and when this price went down and took this low, they did their stop losses to the break even. So now what the price will do? Okay, price will go up, take those break even stop losses, then it will start to fall. So that's why this high is a liquidity, like the at the above of this high will be liquidity. Okay, so that's why we are taking this serious. And now after that, you know that there will be liquidity above of this high, so you will wait for price to go above of this high on a smaller time frame. Okay, so on smaller time frame, now you will say that like this is not that big move, you can hold it for a few days, it can be a swing trade for you. But if you need only 1:2, this much is enough for you, right? You can get your 1:2 or 3 and that's it. Or if you want to hold it, you can hold it, but you never know, like price can go up. Okay, it can come down and it can go up. It's not that 100%. The strategies which I'm like anybody, nobody have a 100% system. Okay, otherwise you are doing hedging or something with lots of money, there's different case. Otherwise nobody have a 100% system. Okay, so price goes up over here. Now you can see at 8 o'clock when the New York session starts, price make a false move towards the upside and it took this high. So now everybody is thinking that this is a break, like breakout, bullish breakout. So people will have their buy stuff sitting over here, right? So when it go up, and what I told you that you should look for sell over there, because 80% is looking for the buy, so 20% will be looking for sells over there. Now you will go on 15 minute, you cannot see any, like you will be not able to see any break or structure or something like that, because me, I will just place the limits and I will just place the stop loss and I will just forget about it. But if you need a confirmation to know that, okay, like for real it's going down, then you can look for market structure shift. Okay, so you will go on 15-minute time frame, because on, oh, you will go on 5-minute time frame, because on 15-minute time frame this is this swing right over here. On 5-minute time frame also you cannot see anything over here, but on 1-minute time frame you can look at over here. On 1-minute time frame, price started to create short-term highs and short-term low gains. So look at over here, price went up, this was the swing, not this will be the swing low. And now people will be saying like he's just making up things, and no, look closely. I have a video on it. There are two types of swing highs and swing lows. Okay, one swing low which fills the fair value gap and goes up above and breaks another swing high. Okay, that's a swing. And one swing is like this. Okay, which has short term high on the right of it and short term high on the left of it. So this will be a swing high. Okay, but this type of swing high is used for to look for break of structure or market, no, not break of structure, market structure shift. Okay, because if you will wait for this low to be taken, then it will be a late, right, price, then they never reach back to this fair value gap and then it kept on falling. But if you look at over here, market break this structure low. Okay, and it left a, there was a fair value gap over here. So now you can take an entry from this fair value gap, and please don't place your stop loss, what's going on, yeah, don't place your stop loss just above here. Okay, because first thing, your spreads will take your stop loss if you have a bad broker. Or it's not like that, it's not like fantasy tale, because price can go up from here also, it will not respect, it will go up, take this high, and then it can fall down. Okay, so that's why don't just give price enough room to breathe, at least 10 pip stop loss. Now you will think, look, I'm missing so much profit over here by giving this 10 pip stop loss. No, you're not leaving something, but the thing is, like, this will be consistent, right? Otherwise, if you have a small stop loss, you will be correct to find out a move in the market, but then also your stop loss will get hit. Okay, so that's why I place like 10 pip stop loss, oh, like this, and then target for relative these lows over here. Okay, then target for these lows, and it will be 1:2, I guess. Yes, like you can see that it's like 1:2, and this price goes and takes that low. So I hope you understood this thing. I just showed you the two examples of how to do top to down approach. First, you have to do the same analysis which you do on a smaller time frame, and then you will do the same thing on a higher time frame. Okay, and then you will do the same thing on a smaller time frame. Just look for liquidities, and if you look for liquidities on daily time frame, you will get to know about the order flow. Okay, and now at this, like on some other pairs, it's not working. Like 1-ish time frame, yes. Yes, this one. Like look over here. Okay, this is US oil, and now see this. What also can happen with you. Okay, it was like so close to 1:1, but price went above one more time. No, it was not. This was not 1:1. It was very far away from 1:1. Okay, so now this what can happen with you. Okay, price went above of this high, and overall bias is bearish on 1h time frame, and on daily time frame also. If you look it over here closely, like price make a some sort of swing high over here, and price went above of this, and I think the price should go and take these lows over here. That's why I'm bearish on this. But on 1h time frame, price gave a good move from 4 o'clock. Okay, just went down, and now if I would have done something on smaller time frame, I would have got an entry like with smaller stop loss. But this is my style of trading. Like this is a very big stop loss though. You can put like one bit like this, but it is what it is, right? So now what you can do is like this what can happen. So you can wait at least, or if you would have got stop loss above this. So for example, market comes down and falls from here. Okay, and now you saw a market structure shift like this. You will mark this fair value gap. Okay, and now you will think that okay, the price has taken the liquidity, price has given like a market structure shift, and there's a very good fair value gap in a premium zone. I should take a sell, right? And you will take a sell over here and this fair value gap, and what you will do is wrong. It will be the stop loss placement. You will place the stop loss above of the structural high. Okay, and your stop loss will get hit. And then if market, who knows, market can fall down from here now. Like nobody knows, right? Market can fall down from here, and I hope so. I will just post the picture of it on my Discord. So join my Discord group also. Okay, I will post the update about this trade also in my Discord group. So now that's why place your stop loss a little bit higher, so you will have enough room so that price can go above and do its thing, because price wants to make a fake narrative that price is going up, but it will fall down. Okay, or worst case scenario, it can go up and take your stop loss. So that's why stop loss placement is also very important. And now let's do another, and I will close the video after that. Yeah, look it over here. Like it didn't went above, so it was nothing like that. What was that? Yeah, this one. Like see, I think so. The price will go down of this, and there will be some sort of small move, which can easily give like 1:2. Okay, so that's why I have this marking over here. It can give 1:2 from here, so I can take an entry from here if price goes down. Okay, and I will just target for 1:2 or this high over here, or these highs, these relative equal highs. I can just target for these. So I hope you guys understood that how to do top down approach. So I should do a summary. So summary is like on daily time frame, you should do the same thing which you do on 15-minute time frame. You should look for swing highs and swing lows on daily time frame, and you should look for that what price did on daily time frame. It took the buy side liquidity or sell side liquidity. And now if price has taken the buy side liquidity on daily time frame or a higher time frame, then your smaller time frame bias will be bearish if it has taken the buy side liquidity. Okay, and now if it has taken the sell side liquidity and the bias on the daily time frame is bullish and it has taken the sell side, then you should look for bias on a smaller time frame. Okay, because price has taken the sell side on daily time frame and the order flow is bullish, so you should look for buy on smaller time frame. Okay, so now that's what I try to say. And then on smaller time frame, either you can go and place the limits where the people will place their stop loss, or what you can do is like you can just wait for the confirmation and you can take the entry from a fair value gap. Like you can take the entry from fair value gap and then only target for 1:2 and place your stop loss properly. And this is simple, and this got simple because I have a lots of experience. That's why this thing gets simple, right? But it will be not simple for you, or it will feel so much simple for you that you will think like this thing cannot be that much simple. And you will think like trading should be complicated. Like yeah, trading is complicated, so we should try our best to keep it simple, because we have to follow a system for day to day every day. So you cannot follow a complicated system every day. Your mind will explode. Okay, so that's why you should only have a simple setup, and you should have a very good risk management, and that's it. And you should have a lots of patience, because if you are trading on a high time frame, on 15-minute time frame, you should have a patience. And if you don't have patience, you will go in smaller time frame, 1 minute and 5-minute time frame, and you will do over trade and you will lose all of your money. Okay, so yeah, this is the end of this video. So I hope you guys like this video. So if you guys like this video, drop a like, share it with your friends, and subscribe for more content like this. And check out the links in the description of my Discord, my Instagram, and my trading ideas group. So yeah, so until next time, wish you good luck and be safe.